Silver has always been the people's metal. It's abundant, divisible and affordable enough for ordinary households. Unlike gold, which central banks and elites monopolize as a high trust reserve, silver in recent history has remained accessible to the public. After years of suppression and neglect, its price has begun to climb quietly but persistently, forcing new awareness. Its accessibility allows silver to function as a grassroots store of value outside institutional control. That is why silver has been demonetized, heavily taxed, financialized, and disguised as an industrial commodity. The neglect is not accidental, it is deliberate. According to the Silver Institute, silver has been in deficit for years. Yet the official numbers of reserves may significantly understate the true stockpiles, which are controlled by the financial oligarchy.
The practice of underreporting precious metal reserves goes back to antiquity. Just consider ancient Athens. During the height of the Laurian silver mines, records show that elites often concealed the true scale of extraction and stockpiling taking place. Public accounts reported only what was fed into the polis treasury, while private hoarding took place and flows were diverted into aristocratic hands, which went unrecorded. The same dynamic repeated under the Roman Empire, where official minting statistics masked the fact that vast amounts of bullion were withheld to manipulate currency debasement and maintain oligarchic control over the silver supply. The incentive to conceal or understate holdings has always been strong, since it allows those in control to influence prices and preserve their advantage. What we call official holdings today likely does not reflect the absolute reality, but instead needs the market incentives, technological limits, and selective disclosure.
Hidden reserves let the system create the appearance of scarcity while keeping real control over supply and liquidity in their hands. This turns the market into a sandbox where price movements, volatility, and investor participation can be observed and managed without exposing the institutions to actual physical silver. The recent rise in silver prices may look like organic demand, but much of it is an engineered signal. By controlling what people can buy and what they see in the financial markets, the financial system preserves its dominance over silver's role in the economy. The rise of exchange-traded funds, future contracts, and now emerging tokenized markets are transforming silver into a controllable instrument. Retail investors often interact with digital claims rather than physical metal, absorbing volatility and assuming operational risk, while institutions retain custody. Scarcity can be engineered by locking up physical silver in financial vehicles, creating the appearance of tight supply. Momentum trading, narrative framing, and price swings are studied as behavioral experiments. Silver becomes a sandbox in this environment, a controlled environment where liquidity, perception, and risk are all managed. Investors feel empowered, but true control remains centralized. The gold to silver ratio is the clearest measure of silver's systemic significance. Historically, it's been used as a key tool of financial control and enormous, absolutely vast exploitation, which has been so significant in generating such enormous dynastical wealth, as we've detailed in various historical videos. It has also managed money supply, controlled trade, and signaled financial stress. During European bimetallism, it hovered near 15 to 1. The US Coinage Act of 1873 demonetized silver, widening the ratio and consolidating gold's significantly major role. The 1934 Gold Reserve Act revalued gold while leaving silver behind. The Nixon shock of 1971 pushed the ratio above 40 to 1, ushering in the modern fiat era. More recently, March 2020 saw the ratio spike above 125 to 1, signalling global liquidity stress, systemic fragility, and suppressed silver. When the ratio fell sharply in the months that followed, silver surged, revealing the latent power of this accessible metal. A high ratio, remember, reflects centralization and marginalization, while a falling ratio signals pressure within the fiat system. The system continues to monitor and manipulate this ratio because it exposes the tension between centralized gold hoards and public participation in silver. Silver's treatment in tax codes reinforces its controlled status. While gold often enjoys exemptions from value added and capital gains taxes, silver is heavily burdened, purchases taxed immediately, and profits are diminished further upon resale. These measures are not neutral fiscal policies. They are deliberate instruments for nudging public behaviour toward traceable, digital or tokenized forms of ownership. The public can participate, but autonomy is limited. Taxation acts as a key incentive to ensure that silver remains within the sandbox, providing the appearance of opportunity without threatening fiat dominance or institutional oversight. Now, industrial uses consume roughly half of annual silver production, including electronics, solar panels, and medical devices. This provides a plausible public explanation for price movements while masking deeper structured dynamics. Rising prices can be attributed to expanding industrial demand, even as financialization, hidden reserves, and supranational structural control operate in the background. Industrial consumption legitimizes silver's market narrative, while the sandbox quietly shapes behaviour, scarcity, and perception. Silver's role extends beyond finance and industry into global strategy. Saudi Arabia has reportedly increased its holdings to diversify away from dollar-denominated assets. China, India, and Russia maintain industrial stockpiles that double as monetary hedges. Indeed, this is a deliberate outsourcing of risk from the core of the financial centre, exchanging sovereign debt for hard asset reserves, as we've discussed previously here. These countries leverage silver's dual function as both an industrial necessity and a partially accessible store of value to maintain autonomy from gold and dollar-denominated reserves. Rising silver prices are therefore not just a financial phenomenon, they reflect strategic positioning, industrial security, and hedging against fiat volatility in a multipolar world. The narrative of silver as the people's metal carries psychological weight. Retail investors often feel they are defying the system by buying silver. Social media, forums, and market commentary amplify this sense of empowerment. Yet, the sandbox ensures that most participants interact through mediated, tokenized, or ETF-based instruments. As we mentioned briefly earlier, prices swing, volatility excites and discourages, and participation continues, while true control remains concentrated. Belief becomes a tool of stability, allowing institutions to manage perception and maintain authority without overt intervention. So silver operates in plain sight, yet it remains a controlled instrument of systemic management. Its apparent accessibility masks a carefully engineered environment where liquidity, scarcity, risk, and perception are all manipulated. From antiquity to today, silver's very accessibility has made it threatening to centralized power. Elites have consistently concealed, debased, or demonetized it, from the hoarding of Athenian and Roman silver to the US demonetization of 1873 and the 20th century removal of silver from circulating money. These measures help to ensure that silver won't become a vehicle of popular autonomy. Modern financialization, taxation, and industrial framing continue this pattern, turning silver into a controlled arena where participation is allowed but never truly free.
The gold to silver ratio remains the clearest signal of stress within the fiat system, and every sharp move in the ratio reveals silver's potential to reassert its monetary role. The system is not worried about silver itself, but it is worried about what people could do if they could hold it and use it. Now, I hope this has been an interesting video. Do check out this ultimate guide to the gold-silver ratio if you want to know more on that. I look forward to seeing you next time. Bye-bye.